Yeah, good evening, members. Office of SC takes great pleasure in welcoming you all to this virtual session on assessment procedures and return of income under the Income Tax Act 2025. As tax laws and compliance procedures continue to evolve, sessions like these help our professionals to stay updated with the latest developments and practical aspects of implementation. We have with us today Chairman of Direct Taxes Committee of SIRC of ICI, CA Ayampalayam Venkatesan Arun, and renowned session speaker CA NAVEEN KHARIWAL sir. On behalf of Office of SIRC, we welcome both of you, sir.
Thank
A
you.
warm welcome to both of you. Yeah, we will start today's proceedings with the invocation of motto.
येष सुप्तेषु जाग्रति येष सुप्तेषु जाग्रति कामं 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 कामपुरुषो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं तद्ब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चन एतद्वैता 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 एतद्वैता.
Thank you. Requesting Chairman, Direct Taxes Committee of SIRC to his welcome address and also introduce our session speaker, CA NAVEEN KHARIWAL, sir. Over to you.
Yes, sir. Good evening all. On behalf of Direct Tax Committee, I welcome you all for the first online program on assessment procedure. Our speaker, NAVEEN KHARIWAL, is no need any introduction. He is well-versed income tax expert across South. He is delivering his speeches. However, I have his profile with me. I read out the profile. The NAVEEN KHARIWAL sir is a BCom graduate, completed FCA, and he's partner in HC Kincha, and he's from the family of accountant, grandfather, father, and brother are chartered accountant. He specialized in direct taxes. Currently member of Direct Taxes Committee of ICI New Delhi for the comprehensive review of the Income Tax Act 1961. Member of committee formed by Income Tax Department for obtaining suggestion for project inaugurated e-filing and CPC, and currently member of Central Tax Corporate Law GST Committee of Federation of Karnataka Chamber of Commerce and Industry. Currently member of Study Circle Study Group Committee of Chamber of Tax Consultant Mumbai. Co-opted member of Direct Taxes Committee of ICI New Delhi for 2020-21. Member in Finance Advisory Committee of Karnataka State Cricket Association. Was part of the team nominated by the Bangalore branch of SIRC of ICI to represent before the Honorable Justice R.B. Ishwar Committee for Simplification of the Taxes. Coordinator and moderator of the JINSA one-day workshop on scrutiny, survey, summon, search. So I think he's a speaker, well-versed speaker, attending more than 50 branch across all over India. In the South, across India, he's attended this meeting. He's well-versed speaker, and his extracurricular activities is keen cricketer, having represented college and university matches and played in league, registered in Karnataka State Cricket Association, represented in cricket matches organized by Bangalore branch of SIRC of ICI. With this few, I welcome our today's speaker, NAVEEN KHARIWAL sir, and also I welcome our past chairman of SIRC, Geeta madam. She is also in this program, attending this program, and also I welcome our International Taxation Committee Chairman Banu Narayana sir, for this participation. Sir, welcome you, sir. Sir, Mr. Naveen, sir, this stage is yours.
Thank you, sir. Thank you so much. Hope my voice is audible, sir.
Yes,
Yeah, sir, audible,
sir.
sir.
Yes, sir. So, dignitaries on the dais, off the dais, past chairman of SIRC and chairman of the International Committee, Taxation Committee. It gives me great pleasure to, deliberate on the assessment procedures and return of income online under the new Income Tax Act 2025. Now, there are two things here. First, Chennai, whenever a call comes from Tamil Nadu, basically, or even Chennai, there is no question of my refusal. For the simple reason, my wife is from Chennai. So, always it goes without saying that I have to, comply. It is like a dictum for me. And when SIRC calls, I have to just abide by them. Secondly, this assessment procedures, my dear friends, 25 years back, a great chartered accountant who is no more amongst us, late and great Sri T.N. Manoharan. I referred his book 25 years back, and what a wonderful, fantastic book. That assessment procedures, what I studied from that book is still ingrained in my head. Still ingrained in my head. And I have mastered all the sections at the cost of sounding immodest. I am telling you, I have mastered all the section assessment procedures, courtesy the late and great Sri T.N. Manoharan, because what a simple language the book was, and how beautifully explained with a lot of examples. In fact, I am telling you, there is section 150 in the old Act, Income Tax Act 1961, 150 subsection 1, which is subject to 150 subsection 2, which says, hey, goodbye, all the timelines of section 149. I will reopen whenever I want. To hell with your timelines, up to 4 years, beyond 6 years. See, there are 3 timelines now. Earlier it was 3 years and 5 years. Then with effect from 1st of September 2024, there was an amendment which says 3 years and 3 months, 5 years and 3 months. Then come to the new act under 2025, which you are going to deliberate. It says 4 years and 6 months and 4 years, 3 months, 6 years and 3 months, etc., etc. Why we remember is because of this great human being, great personality. So we move forward, sir. We will try to complete as much as possible. And I also want to take up each and every question which is there online. We will see what best can be done, sir. We will try to take up all the important provisions regarding return of income and regarding assessment procedures. So I will just, present my PPT. It will be shared with all of you. Don't worry, my dear friends. I will upload it to SIRC. Don't worry. They will share it. Don't worry. Is it visible, sir? PPT is visible, sir, I hope?
Yes, visible, sir.
Yeah, we'll continue, sir. Straight away, we'll go to the topic. Now, straight away, I am dwelling into the topic of return of income and assessment procedures. So now, my dear friends, what is the permanent account number? We start with this. We'll try to cover all the important provisions. Then we'll try to take up all the questions. My dear friends, the permanent account number in the old act was 139A, which is now 262 subsection 1. So what is the section telling? Every damn person on this earth under the Income Tax Act has to be allotted a PAN. Okay. Who will allot the PAN? The assessing officer. When to allot the PAN? Obviously, when my total income is above the basic exemption limit, or if I'm carrying on business or profession, my turnover, my sales, my gross receipts should be more than 5 lakh of rupees. And if I'm required to file a return under section 263 of the Act. What is 263 of the Act? My dear friends, 263 is under 139(1). Now, earlier 263 is what? Revisionary provisions. So, my dear friends, when you come under the new Act, don't get confused. Section 263 is equivalent to section 139(1) of the earlier Act. Okay, so 263 is what? 139 on the present Act. So it is not 263 is revisionary powers. Then, if you are a resident other than an individual, financial transaction aggregate into 25,000 or more in a tax year. So what is a tax year? All of you know, very, very simple concept. There is no confusion. Sir, what is a tax year? Take tax year 26-27, assessment year 26-27. Up to March 26, my dear friends, when the financial year ends, that will be assessment year 26-27, which I have to file return. Now what is happening is tax year 26-27. When should I file the return for tax year 26-27, my dear friends? In the next tax year. That will be 27-28. Then, if my managing director, trustee, karta, etc., okay, or any such person competent to act on behalf of the person referred to in clause D, because it is other than individual, then such transactions as may be prescribed by the board yet to prescribe. Move forward, sir. These are all important, provisions. Now, somewhere in the PPT also, I have given, my dear friends, the observations, recommendation of the Select Committee of Lok Sabha. So what has happened is, why I have given this? See, what has happened, the government, before implementing this act, that is new act 2025, they formed something called as a Select Committee consisting of 31 or 32 members of parliament. So here the Karnataka State Chartered Accountants Association sent me as one of their representatives. I appeared before the Select Committee. SIRC also, I was there in Nungambakam. Myself and Banu Shekhar sir and other 6-7 CS were there from entire south. So we were working under the famous chartered accountant of Kerala, Babu Abraham Kaliwaili sir. On one Sunday we were there in SIRC. We were there in Nungambakam. I had the opportunity to take the hospitality of SIRC morning till night on a Sunday. We all deliberated on various provisions which our chairman had given. In turn, we gave all the inputs, and those inputs were forwarded to the president of ICI, who in turn forwarded the same to the finance ministry. Let me tell you, my dear friends, similar with the Select Committee of 31 MPs. And as a common man, what we thought, they will not have any knowledge. What knowledge do they have of the law? I was pleasantly surprised. They had beautiful knowledge, I'm telling you, about the subject. They had fantastic knowledge, enormous knowledge. More than 285 recommendations were accepted by the Select Committee, I am telling you. Whatever recommendations given by the Chartered Accountants across, 285 recommendations have accepted by Select Committee and was incorporated in the law before its implementation. Now, come to return of income, my dear friends. What is 139(1)? Is 263 subsection 1 clause A. So what is 139 and 263 1A? So every person will now for a tax year file a return. When to file, sir? On or before the due date. So who are these persons? There are 10 persons, my dear friends. What was scattered earlier in 139 have all come under one umbrella. So this is one of the advantage of the new act. You cannot hoodwink the revenue today because, for example, you take this charitable trust. So there is section 11, section 12, section 13, then your accredited income that will go to some other chapter. So there, that 115 BBC, fair market value of assets, less liabilities, etc. Different chapters. It was scattered, staggered all along. Now what has happened? Everything has come under one roof. So for this 263 1A, they are telling every person should file a return of income. Very good. When? Before the due date. How many persons? There are 10 persons. Number one, company. Whether the income of the company is 0, -1 or +1, he has to file return of income. Then number two, firm. Whether the income of the firm is 0, -1, +1, mandatory to file return of income. Number three, a person other than a company or firm, when to file return of income? If its total income or the total income of any other person in respect of which is assessable under this act during the tax year. Now imagine it is during the tax year. What was assessment year? Tax year. Without giving effect to provisions of 17B, Schedule 8 or deductions allowable under 82 to 88 of Chapter 4E. What is Chapter 4E? My dear friends, in the earlier act, Chapter 4E was capital gains. Fortunately, even under the new act, it is same capital gains. So Chapter 4E is still capital gains under the new act. Then he is telling basically, person other than a company or firm, see the total income. Which total income? Before claiming deduction 82, 83, 84 means before 54, 54F, 54G, etc., etc. Of Chapter 4 means capital gains. Similarly, what is Chapter 17B and Chapter 8, Schedule 8? My dear friend, Chapter 7B, 17B is for your registered non-profit organizations. Then your Chapter 8 is for the old section, what was 13, political parties. And Chapter 4E we discussed 82, Section 54, 83, 54B, 84, 54D, 85, 54 EC, 86, 54F, Section 87, 54G, Section 88, 54 GA. And what is Chapter 8, my dear friend? One more we saw. Chapter 8. Chapter 8 is nothing but your Chapter 6A deductions. Chapter 6A deductions. So what are the old sections, sir? Earlier it was 80C to 80U. Now it is Section 123 to Section 154 of the new Act. Earlier Chapter 6A, now Chapter 8. Earlier 80C to 80O. Now 123 to 154. So before claiming all these deductions, all these exemptions, is your income more than basic exemption limit? Yes, sir. Then please file return of income. That is the third category of person. Now, we move to the fourth category of person. It says specified entity as defined in 263 subsection 9 clause C. If its total income without giving effect to provisions of section 11 exceeds the maximum amount which is not chargeable to tax. That is your old section 10. Then university, college or other institution in as per 45(3)(a, that is your earlier 35 section, 35(1)(2), 35(1)(3), etc. Then sixth one is business trust. Then investment fund. Earlier it was 115 UB, now 224. So basically all these persons have to file return of income. Under which section? 263 subsection 1 clause A. Who is the eighth person? Now eighth person, what are they telling? The person who has sustained a loss in the tax year under the head PGBP or under capital gains and who intends to claim that such loss is to be carried forward as per this act, on the act, new act. So a person who has sustained a loss in the tax year, okay, that is PGBP. Earlier, what was it, my dear friend? 72, capital loss. 73, speculation loss. 74, capital loss. 74, capital A, loss from owning and maintenance of resources. 32 within bracket 2, loss from house property. Loss from house property. 71, capital P. What is 32 within bracket 2? Unabsorbed depreciation. So only for these two losses, earlier 139.3. What was 139.3? All the losses you want to carry forward, please file the return within the due date. Similarly, for 71B, loss from house property, as well as 32 to unabsorbed depreciation, you need not file the return in time. So now here he is telling 263 subsection 1 clause A subclause 8. Person who has sustained a loss in the tax year, you guys want to carry forward that loss. Section is telling only PGBP and capital gain. No more, sir. PGBP, capital gain, you guys want to carry forward such loss or you want to claim such loss, then please file the return within the due date. That's all it says. Earlier 139.3 read with section 80, read with section 157. Why 157? I told you I am a Manoran student. So 156 was notice of demand. 157 is notice. That is the intimation for when there is a loss. That is merely theory, sir. There is no such intimation passed till today by the department under 157. But there exists a section under 157 of the Act which says intimation of loss. So earlier I am connecting 139.3 read with 80, read with 157. Come to the ninth person, my dear friends. A person who is a resident other than a not audit resident. It was always there, sir. Even this was there in the previous Act. Person resident other than not audit resident is a beneficial owner or otherwise any asset, okay, including any financial interest in entity located outside of India or has a signing authority in any account located outside India. Either is a beneficial owner or is a beneficiary of any asset. Same thing, it continues, including any financial interest located outside of India, except where any income arising from such asset is includable in the income of a person referred to in item A, obviously. So then also you have to file return of income. The last one, 263 1A clause 10 says a person other than a company or firm fulfills such conditions as may be prescribed. What are the conditions prescribed, sir? Kindly go to Income Tax Rules of 2026, 163. Here I want to commend the department also with the swiftness which they have moved. Earlier 2 years back or one year back, 1.5 years back, I had an opportunity to meet the principal chief commissioner in Chennai there. And they were under tension, they were preparing for all these deductions because the finance minister set certain goals. 150 officers committee, my dear friends, spending 60,000 man hours by the department. They have implemented this very simplified act within 1 year. Okay. So commend my kudos and my congratulations to the entire team. Yes, so also the finance minister Nirmala Sitharaman ji, who will be presenting her record-shattering, record-breaking 10th budget next year. The most budgets presented in our finance ministry is by late and great Sri Morarji Desai. Next year, it will be broken by Nirmala Sitharaman ji, 10th budget, my dear friends. Come to 263 1A 10. Such persons as may prescribe, you have to file return of income. Okay. So always don't think, my dear friend, there is no income. It is below taxable limit. Why should I file return of income? Wrong. Please. You have to see 263 1A 10. The 10th category of persons, even though their income may be a 0, still you have to file return of income. Why? A says you have deposited 1 crore rupees or more in current account. Okay, I am not bothered about your income. It may be 0. But if you have deposited more than 1 crore in current account, 263, 1 at 10, they are telling file the return of income. If you guys have entered incurred expenditure of 2 lakhs on either yourself or on either person for travel to foreign country, your income may be 0. Still, you have to file return of income. Number 3, for consumption of electricity, you have spent 1 lakh rupees or more than 1 lakh rupees. Still, you have to file return of income. If your sales, gross turnover or gross receipts in the business is more than 60 lakh rupees. So, it may be below taxable limit. They are telling, I don't know. You have to file return of income, mandated. Then your total receipts in profession is more than 10 lakh rupees. File return of income. 6th case, they are telling, suppose your TDS and TCS is round about 25,000 or more. And in case of a resident of age of 60 years or more, sir, senior citizen. I would like to tell you, my dear friends, in the earlier act, senior citizen was defined in 6 places. Now in the new act, it's defined in only 1 place. Earlier act, 6 places. Everywhere the senior citizen definition was there. Now only 1. It is at 1 place now. So this everything is under 1 umbrella. So senior citizen, when to file return of income, my dear friends, more than 60 years, amount shall be taken as 50,000 or more. Then in your savings bank account, if you have deposited 50 lakh rupees or more, etc., all these conditions, if you by default, if you fall in any of these conditions, you will have to file return of income. Move forward, my dear friends. And 263 1B says all these guys have to file return of income on or before the due date, regardless of the income or loss. Company, firm, I told you, whether you have income or loss, you have to file return of income. It's a mandatory. That is a company, firm, university, college, or other institution referred to in 45(3)(a). Okay. Then business trust, then investment fund, person who is a resident other than not ordinary resident, etc. So what are the due dates? All the due dates are same, my dear friends. Only thing is what happened? There is an amendment. There are 128 amendments in this Finance Act 2026. See how fast the government is moving. Even before the new act was implemented 2025, they have brought in amendments. 128 amendments are there. So please understand, in the due date, what is the amendment? They have gone back to the olden days, 20 years back, when the due date for business was 31st August. So they are telling not only 31st July. Now, it will be 31st August for all those guys, for all non-audit business cases or trust. ITR 1, ITR 2, it will be 31st of July. All the non-audit business cases or trust are proposed to be allowed time till 31st of August. So, 263 1C is the due date, my dear friends. 263 1A, different categories of return of income. How many people have to file? 10 people. 263 1B, for whom all it is mandated to file return of income. 263 1C is what, my dear friends? It is the due date. Earlier, where was the due date? It was in explanation to 139. Do not worry, more or less the spirit of the act, how the act moves, it is all the same. There are not wholesome changes. How the act moves is almost same, my dear friends. Only thing is you have to remember the section number. For that also already you have this comparison. You have this tabular form already. If you put the old section, new section, easily it comes. So don't worry about that. That also you can do it. Do not worry. So now 263 1C, I told you the due date amendment. See, this is I have given in this, the memorandum to Finance Bill 26. I have also given the Finance Minister's speech. So what is it being told in the memorandum? In order to facilitate the taxpayers who are engaged in business or profession and partners of a firm who do not require to get their books of account audited, and also the trusts, it is proposed that more time should be made available to them to prepare their books so as to make them the necessary compliances. So rationalization of due dates in such non-audit business cases and trust is envisaged to facilitate taxpayers and to reduce grievances. So therefore, my dear friend, the due date is extended to 31st of July 31st of August. Now, amendments made in Income Tax Act 25 shall come into force from 1st day of April 26 for tax year 26-27 and subsequent tax years. Amendments made in Income Tax Act 1961 shall come into force from 1st day of March 26 for assessment year 26-27, previous year 25-26. Why for all, assessment year 26-7 is only from 1st March 26? Because from 1st of April, there is no Income Tax Act 61. So from 1st of April, the tax year kicks in, the new Income Tax Act 2025 kicks in. Therefore, all the amendments, whatever they made in Income Tax Act 1961, but for the 4 retrospective amendments, are all with effect from 1st of March 26. We are deliberating only under new Income Tax Act. So this is the 263 subsection 1 clause C, the amendment. We move forward, sir. Now, this 139 6, etc. Board may prescribe form for furnishing return, etc. Okay. Then 139(6)(a), particulars prescribed in the return of income. So in the return of income, so many things are prescribed. What are the income exempt from tax? Assets of the prescribed nature, value held by SSC as beneficial owner or otherwise, or which is in beneficiary, bank account, credit card, etc., etc. All these are there in prescribed in the section. That is why they are giving that name and address of partners, etc. All these are asked in the return. The power to ask all these things, all these particulars prescribed, comes from 263, subsection 2, clause B. Then 263(3), my dear friend, it is akin to 139(1)(c), which says central government may by notification exempt any class or classes of persons from the obligation to file a return of income under this section, subject to conditions therein yet to prescribe. Now, what is 263(4)? It is belated return. What was earlier, my dear friends, belated return? 139(4). So what was the belated return earlier? Any person who has not furnished a return within the time allowed to him under subsection 1, that is 139(1), may furnish a return for any previous year at any time before 3 months prior to the end of relevant assessment year or before the completion of assessment, whichever is earlier. 31st December was the due date. So 31st March year is ending. Assessment year, end of relevant assessment year. 3 months prior to the end of relevant assessment year, that is 31st December. It was there in the 139(4) old act. What is there in the new act? Similar section. Under 263 subsection 4, what is the definition of a belated return? Rather, how it is worded? Any person who has not furnished a return within the time allowed to him under subsection 1. Sir, subsection 1, 269(1)(a). Subsection 1, 269, due date given in 269, subsection 1, clause C. He may furnish a return for any tax year now, not assessment year. Excuse me, for any tax year. Now, what is the time period? Within 9 months from the end of relevant tax year. 9 months from the end of relevant tax year, same thing, or before the completion of assessment, whichever is earlier. Don't get confused. Take the example, tax year 26-27. What is the due date to file, my dear friends? Tax year 26-27. It will be next year, 31st of July 27. No problem. So within 9 months from the end of relevant tax year. So 26-27. March 27, tax year is ended. 9 months from the end of relevant tax year. 9 months plus 31st March, 31st December 27. Nothing but same thing. Okay, 9 months from the end of relevant tax year, you have time to file belated return or before the completion of assessment, whichever is there. Come to revised return. So if a person having furnished a return under subsection 1 or subsection 4, subsection 1 is your 263(1)(a), which is 139(1), or under subsection 4, which is 139(4) or 263 subsection 4. Very good, no problem. When can I file revised return? When I discover any omission, when I discover any wrong statement, then that guy can file a revised return. Again, time limit. Ditto of the belated return, my dear friends. 9 months from the end of relevant tax year or before the completion of assessment, whichever is earlier. Earlier, what was 139(5)? Any person having furnished a return under subsection 1 or subsection 4 of 139 discovers any omission or wrong statement. Those two keywords are there in the new act also. Omission or wrong statement. Then that fellow can furnish a revised return at any time before 3 months prior to the end of relevant assessment year. 3 months prior to the end of relevant assessment year. Same thing. That will be 31st of December. Now what it says? Within 9 months from the end of relevant tax year. Again, 26-27 tax year. Tax year will end on 31st of March 27. Let us take the due date is for it's a non-business trust. It's a business trust. It's a business, but it is not a audit. So it's a non-audit business. What is the due date? 31st of August 27. I want to file a belated return 31st of December 27. I want to file a revised return 31st of December 27. That's all. Move forward, sir. Now what are they telling? Sir, time limit you know for filing original return, for filing belated return, for filing revised return. The government is in a hurry to collect all the taxes. It is not in the earlier, within 1 year from the end of relevant assessment year, when they used to levy penalty, etc. Now they are not even waiting for the year to end assessment year. They are telling up to 31st December, finish. Beyond 31st December, what can you do? I had to file only updated return, 139(8)(a). Now they are telling, I will extend the time. Honorable Finance Minister is telling in this budget, I will extend the time for revising the return from 31st of December up to 31st of March, but with payment of nominal fee. What is the logic? Honorable Finance Minister is telling, my dear citizens of India, the time limit for filing belated and revised return is the same, 31st of December. Therefore, a person filing belated return on the last day or 1 week before, etc., has no time to file revise the return. So therefore, I am going to extend the time for only revision of returns, not for belated return. I will extend the time for revising the return from 31st of December up to 31st of March. But you'll have to make a payment of a nominal fee. What is the nominal fee? Less than 5 lakhs total income, 1,000 rupees. More than 5 lakhs total income, 5,000 rupees. That's all. It can be done on the old act. It can be done under the new act. Which is the section under the new act? 428 clause B. Very simple. 428B. Subject to 428B. Now, under the new act, my dear friends, 263 subsection 5, there is an amendment. Where amendment? Finance Act 26. Income Tax Act 2025. What does the amendment say? 428B. My dear friends, less than 5 lakhs, 1,000 you pay extra. More than 5 lakhs, you pay 5,000. What about under the new old Income Tax Act? There is a section 234I. Subject to 234I. How much? Same thing. Less than 5 lakhs, 1,000. More than 5 lakhs, 5,000. Very, very simple. Okay. Move forward, sir. Now, we will move forward. Yeah, this is what I was telling you. 428 subclass B. That is for the new act. Now, this is how the new section is worded. Revised return, my dear friends. After the amendment. 263 subsection 5. Akin to 139 subsection 5. If any person having furnished a return under subsection 1 or subsection 4. What is subsection 1? Original return 263(1). What is 263(4)? Belated return. Discovers any omission or wrong statement therein. He may subject to the provisions of 428B, which I told you. He can furnish a revised return within 12 months from the end of relevant tax year. Very simple. Within 12 months from the end of relevant tax year. For tax year 26-27. What is the due date for filing revised return? Up to 31st of December. Now they are 31st of December 27. Now we are telling I want to revise a return subject to 428B. Then 3 months more I have the time. So therefore, beyond December up to March is telling you can revise a return subject to 428B. So there is no problem. Similarly, my dear friends, it says here 428B. Now the doubt will come. How do you know that the fee is to be paid only between January to December? Where is that given? Where is that sentence? Please see 428B. Furnishes a return under section 263(5) beyond 9 months from the end of relevant tax year. He shall be liable to pay by way of fee beyond 9 months. Beyond 9 months from the end of relevant tax year. What is the relevant tax year end? March 27. Tax year 26-27. March 27. So from that, beyond 9 months I am furnishing. That is after 31st of December 27. That means I have to pay a fee. 1,000 if the total income does not exceed 5 lakhs and sum of 5,000 in any other case. Therefore, 263(1) original return. 263 subsection 4 belated return. 263 subsection 5 revised return. Again subject to 428B up to 31st of March I can file, my dear friends. So see how much you can file the return of income. Everywhere you have got. Now move forward for return of income. What is the time limit? I told you even under the old act, Income Tax Act, there is an amendment 139 subsection 5. All the amendments are applicable with effect from 1st day of March 2026. Subject to 234I. Same thing. That 5 lakhs and more than 5 lakhs, 1,000 and 5,000, etc. Move forward, sir. So now the assessee, this fellow is filing return of income. Even the time limit for revised return has been over. So time limit for revised return is also over. So what this fellow can do? He can still file an updated return. 139(8)A, updated return was there. 4 years I could have filed. 12 months to 24 months, 24 months to 36 months, 36 months to 48 months. 4 years I could have filed return of income. Subject to what? Additional tax and penalty 25%, 50%, 60%, 70%. What is already there in the act, my dear friend? 139 subsection 8A. What was there? You have not filed a return either under 139(1) original return, 139(4) belated return, 139(5) revised return. No problem. Late Latif, you have come in the last. I am still giving you opportunity. You file a return. It is called updated return. ITRU. File return, updated return, 139(8). Up to 12 months from the end of assessment year. Between 12 months to 24 months from the end of assessment year. 24 months to 36 months from the end of assessment year. 36 months to 48 months from the end of assessment year. Prevailing law under the old Income Tax Act. Rate of tax, additional tax and penalty 25%, 50%, 60%, 70%. Even in case of search today, my dear friends, 158 BC, it's only 60%. If I file updated return between 36 months to 48 months, it is 70%. Now, what you have made, sir, amendment? Now, please tell me what is the amendment you have made? They are telling, we will see what are the amendments. So now, just go through the section. I am coming back to 263 subsection 6, which is the updated return under the new act. Updated return under the new act. 263 subsection 6 clause A. What are they telling now? Whether or not you guys have furnished a return under 263 subsection 1, original return, 263 subsection 4, belated return, 263 subsection 5, revised return. Then you may furnish updated return at any time. Why I am telling you, my dear friends, just to go through the law, how the law has changed. At any time within 48 months from the end of financial year succeeding the tax year. Okay. So at the any time within 48 months, same it is, sir, period 48 months from the end of financial year. Again, tax year 26-27. When does the financial year end? March 27. So March 27 financial year end. 48 months from the end of financial year succeeding the relevant tax year. Financial year when it will end succeeding the relevant tax year. 26-27, add 1 year, March 26-27 tax year. March 28, from March 28, 48 months. Okay? No problem. Now move forward, sir. So 263.6b. 263.6a gave the time limit. Now 263.6b is telling provisions of clause A shall continue to apply for a tax year even if a person has sustained a loss and has furnished the return of loss within the due date. Mark the language. You can file the updated return even if you have sustained a loss. The law says and has furnished a return of income within the due date. So that loss return also you should have furnished within the due date. Then you can update what? A return of loss, which was not allowed in the earlier act, you would not allowed. Now they are telling even return of loss you can file a updated return. But that updated return should be a return of income. It should not be a return of loss. My dear friend, 263.6b is telling person has sustained a loss, file that return of loss within the due date. That return of loss you can file updated return of income. Return of income, not return of loss. Provided that return of loss is filed within the due date. Don't ask me if the system will allow. Excuse me. If the system allows, you can do anything, sir. Don't tell me. For example, all your, we'll be seeing 280, 280, your 148 notice. What is now 280? See, 148, 3 months time is there. Even after 6 months in the portal, it does not close. I can file a 148 return, although that will be invalid. That 148 return I can file even after 5 months on the portal. 3 months are over, but on the portal, I am telling the practicality, I can upload the return 148, I can even get an acknowledgement. But that is not a valid return. Whatever income declared in such a invalid return filed in pursuance to notice and 148 will not be considered. When the assessing officer will issue notice, he will continue return income nil only. He will not take that declared in the return because it is filed beyond the due date. Certain things portal allows. Certain things law stops, but certain things portal will allow. Move forward, sir. So now what is the amendment made in this clause? 263.6b. Now he is telling, no problem. Even for loss, I allowed you updated return of income. Now he is telling one amendment is what? That updated return is a return of income. Okay. Why I stress there? Because that was the existing section. Now there is amendment in this B. There are 2 amendments. What are the amendments? First is, you told, sir, return of loss is there. Return of loss should be filed within the due date. And it should be return of income. Very good. Now they are telling it need not be return of income. It may be return of loss only, which updated return, but the loss should be reduced. Updated return has the effect of reducing such loss. That is one amendment. Second amendment they are telling, very beautiful amendment. They are telling even if you have received notice under 280, that is 148, you can update the return. You can file updated return, meaning to say. Earlier you knew, my friends, if the case is reopened, notice under 140 is issued, no question of filing updated return. So now they are telling no problem. Even though you have now received this 148 notice, you can still file a updated return. Once you file updated return, you cannot file 148 return. You cannot do this 2 timing. You have filed updated return for the year. In response to that Okay. And you cannot file a return under 148 now. Where an update return is furnished by a person for the relevant tax year in pursuance of a notice issued on 280 within such period as specified in the said notice. In such a case, the assessee shall be precluded. The assessee shall be precluded filing return in pursuance of said notice in any other manner. Okay. Now, move forward, sir. These are all the memorandum. So, this amendment has been made. Suggestions were received from stakeholders that update return may also be allowed in such cases where a taxpayer is reducing the amount of loss. So they gave, suggestions received from stakeholders. Please allow us to file return even where my loss is reduced in comparison to the actual loss, actual loss claimed as per the original return allowed. Next, they are telling, when are the amendments applicable? Obviously, I told you, sir, under the new Act, 1st April 2026. Similar amendment shall be made in Income Tax Act 1961 to align with the proposed amendments in Income Tax Act 2025. From when it comes into place is 1st of March 2026. Now, you are telling very good. You are telling even after 148 notice issued or 280 notice issued, you can file updated return. They are telling just wait. If you want to file a return even after reassessment proceedings are initiated, give me more money. Give me 10% more. Sir, 25%, 50%, 60%, 70%, now 80%. Additional 10% rate of tax over and above the rate applicable for the relevant year. Then assessing officer will then use only this updated return in his proceedings. So assessing officer obviously will do the assessment based on the updated return filed in response to notice under section 280. So reassessment notice have come. I filed an updated return. There then you file updated return, no problem. Even though reassessment proceedings have been initiated, I can file updated return. So that tax will be more, 10% more, additional 10% based on 25, 50, 60, 70. So you add 10, 35, 60, 50 plus 10, 60, 60 plus 10, 70, 70 plus 10, 80. Thereafter, assessing officer will use only the update return to complete his assessments. Okay. Why? Earlier, my dear friend, 263 subsection 6 class C subclass 5. What happened? It prohibited the filing of update return in such cases where any proceedings for assessment or reassessment or recomputation or revision of income is pending or has been completed for the said tax year. Now, it was not allowed. Accordingly, filing of update return not allowed where proceedings has been initiated. So now it is allowed based on the amendment. Move forward, sir. Now, this 263 6C. Sir, we are continuing with our discussion of updated return only. Now, then what it says, what all returns you cannot update it. Suppose an updated return has the effect of decreasing total tax liability. Okay, you cannot file an updated return. If the updated return results in refund, you cannot file updated return. Updated return has already been furnished, you cannot revise. Updated return already furnished, you cannot revise such return. Then any proceeding for assessment or reassessment or recomputation is pending or has been completed. Okay, their amendment is done now. You know that. Then the assessing officer in possession of the information that there is a violation of specified laws which is defined in 263 subsection 9 clause D, and the same has been communicated to him prior to the date of furnishing of updated return. So in such circumstances also you cannot file a updated return. Information is received under an agreement referred to in 90 or 90 of the Income Tax Act 1961 or 159 of the Income Tax Act 2025. Okay. And the same has been communicated to him prior to the date of furnishing of updated return. You cannot file updated return. Suppose prosecution proceedings have been launched under Chapter 22 of the new Income Tax Act, you cannot file a updated return for such tax year. Then 36 months have expired from the end of financial year succeeding the relevant tax year, and any notice to the show cause under section 281. What is show cause under 281, my dear friends? 148A. See, when was 148 issued? Subject to 148A, show cause. That 148A is nothing but 281. What is 148? Is nothing but 280. So they are telling 36 months have expired from the end of financial year succeeding the relevant tax year. Any notice to show cause under 281 has been issued in his case. except where an order has been passed under 281(3), old section 148A3, determining that it's not a fit case to issue notice under 280, or such person or belongs to such class of persons as may be notified. So they are telling, if suppose, notice to show cause is issued 148A, then except where an order has been passed on 281(3), I can file them. What is the 281(3)? My case was taken up for reassessment proceedings, but order was passed under 148A3, determining it's not a fit case to reopen. So they themselves told it's not a fit case to reopen. Therefore, then I could file a updated return because it was closed. Suppose notice issued, any notice to show cause, then it is not possible to, and 36 months have expired. Move forward, sir. Person also shall not be eligible to furnish an updated return where search has been initiated. 247 means earlier 132. Any books of accounts, other documents, any assets requisition at 248. What is 248? 132A. So search has been initiated, no question of filing updated return. Books of accounts, assets requisitioned under 132A or presently 248, no question of filing updated return. Survey has been conducted under section 253, other than this subsection 4 of the said section. That is, what is 253, my dear friends? 133A. Survey is conducted 133. I cannot file other than subsection 4 means what? TDS survey. TDS survey is there, I can still file a updated return. Then notice has been issued under 294 in pursuance to provisions of section 295 for the year that in which search is initiated or survey is conducted or requisition is made. So what is the 294? Nothing but your block assessment 158 BC. And what is the 295? It is that, that 158 BD, undisclosed income of any other person. So here also, my dear friends, I cannot file a updated return. Move forward, sir. So what is 263 subsection 6 clause E? Again, we are continuing the discussion. So what is this? They are telling now akin to 7th proviso of 139(8)(a). Continue with the discussion of the updated return. So person has furnished a return under clause A, and as a result, the loss or any part thereof carried forward on chapter 7 or undisclosed, chapter 7 is a set of carry forward of loss. 33(3)(b) is depreciation, old section 32. Okay. So, yeah. Okay. Under chapter 7 or unabsorbed depreciation carried forward on 33(3)(b) or tax rate carried forward 206C1M to P or 206(2)(e) to H. That is your AMT and your MAT is to be reduced for any subsequent year. So they want to reduce your loss or your MAT credit or AMT credit, etc. Then updated return shall be furnished for each such subsequent tax year. You want to reduce your loss? No, sir, 50 lakhs business. I want to reduce. So no problem. They are telling you want to reduce your loss. Then loss as a result, loss or any part thereof. Why? Because of unabsorbed depreciation carry forward 33(3)(b) or tax credit carry forward. So therefore, is to be reduced. Then also you have to file update return for each such year, AMT and MAT. Move forward, sir. Now, defective return. What is defective return? 139(9) you knew, sir. Defective return. There are certain conditions now. Return of income will be treated as defective. Sir, CPC will send 143(1)(a). UPA, they will tell that return is defective. So you will have to, reply within the time specified. Then they will cure the defect, or they will tell, no, 143(1)(a), etc. I will issue intimation 143(1). I cannot accept it, whatever. Or they may cure the defect. So what is our telling? 139(9) equivalent to 263 subsection 7. What is it? Where the assessing officer considers that the return of income furnished by the assessee is defective, then he will intimate the defect and give an opportunity to rectify the defect within 15 days from the date of such intimation. 15 days time will be given. That mandatory they have to give, sir. Or within further period as may be allowed on an application made by the assessee. If the defect is not rectified, within the period allowed, then the return shall be treated as invalid return. Suppose they gave 7 days time, or they gave 15 days time, or you filed an application, kindly give me 5 days more, etc. But you did not rectify the defect within the time allowed, then it will become an invalid return. Consider 10 crores loss was carried forward. You filed the return within time. 10 crores loss is there. it became defective return. They send you the notice. You did not reply. 15 days time is there as per law. You did not reply. So what will happen? It will treat as invalid return. Treated as return having not been filed, 1 crore loss goes for a toss. Return is not filed within the due date. It was considered a deemed not to be filed at all, non-EST, void ab initio, where the assessee rectifies the defect after the expiry of the period allowed. For example, 7 days time the assessing officer has given. I rectified, say, after the 9th day. Online, it is still open. It is still open. That fellow has not touched. Okay, he will tell. I gave 7 days time, but you rectified the defect within 10 days. Anyway, so I will give you time, not an issue. Don't worry. So I will condone the delay and I will treat the return as a valid return. Now, as per the rules, my dear friend, when can a return of income be treated as defective? Conditions for treating a return as defective under section 263 subsection 7. So that is in, what is the rules? 166 of IT rules. All return of income shall be treated as defective if any of the following conditions is satisfied. This is not given in the act. This is given in the rules. Return of income shall be regarded as defective if any of the following conditions satisfied. All fields, parts, schedules, statement, columns in the return as applicable not duly filled in, including those relating to computation of income. See, it becomes defective. All the fields in the return, parts in the return, schedules in the return, statements, columns in the return, they are not filled in, including those relating to computation of income. It may be treated as defective. A report of audit in auditable cases referred to in section 63 has not been furnished prior to the date of filing return of income. Referred to in 63 is your 44 APA section. Report of audit referred to in 63 has not been furnished prior to the filing of return of income, or if the return of income is furnished under 263(6), details of payment of tax as per section 267 are not duly filled in the return. That means, you know, your 140B details, tax paid on updated return. Then brought forward credit of minimum alternate tax or MAT, your alternate minimum tax, AMT, claimed in the return not in accordance with the carry forward of MAT or AMT in the latest return. Okay, so all this, it may treat the return as defective. Board may notify the class or class of person to which any of the conditions specified in clauses A to D shall not apply or shall apply with such modifications as may be specified in the notification. Okay. Move, sir. Next is 139(9)(a). So 263 subsection 8. What is 139(9)(a)? Nothing but 263 subsection 8. So provisions of this, what is this 239(3)(b), sir? Provision section shall also apply to a return of income which is furnished in pursuance of an order passed under section 239(3)(b). 239(3)(b) is nothing but 119(2)(b). What is 119(2)(b), my dear friend? Nothing but we used to file, you know, earlier before the Principal Commissioner of Income Tax, condonation of delay in filing return of income. 119(2)(a), 119(2)(b). 2A is for tax, 2B is for the refund, you know. So there is condonation of delay. Today you cannot file condonation of delay. Invariably the PCIT will tell, my dear, go and file updated return. If this is a refund, I have no other choice. I need to file petition to PCIT only. Then the provisions of this section shall not apply to a specified senior citizen as referred to in section 402 subsection 39 for the relevant tax year in which tax has been deducted at source under section 393 subsection 1, that is your TDS. For the purposes of this chapter 492 subsection 39, senior citizen is defined. Specified senior citizen means an individual being a resident in India who is the age of 75 years or more, and that fellow has only pension income and no other income except the interest received or receivable from any account maintained by such in same specified bank. So in the same bank, there should be pension income. In the same bank, in the same account, there should be interest received, in which is receiving this specified pension income. He should not have any other account. Then he has furnished a declaration to the specified bank containing particular in such form and verified in such manner as we described. You also need not file the return of income. But what to do if you want refund? You need not file return of income, fine, sir. But if you want refund, you have to file return of income. The TDS you want to claim, you have to file return of income. I remember, having given the suggestion to the select committee, which was not accepted. I gave a suggestion, to the select committee stating that, in India, my honors person was attained or age 75 years and above. If the person is not carrying on any business, he's having only some interest income or, some shares income, mutual funds, etc. or some rental income, etc. He's not active in business or profession. So therefore, what will happen? Because it's not carrying on business, I told them you exempt such individuals. Don't ask them to file return of income at all. Don't collect any tax from them unless they are active in business or they are active in profession. So they told no, very good suggestion, but it cannot be accepted like this. So anyway, 75 years of India's independence, that thought struck, and I thought anyway we are not giving any social security measures, etc. to our respected senior citizens. So I thought, in the income tax, at least, we could make a provision. That they told very good suggestions, sir, but it cannot be accepted. Anyway, move forward, sir. So what is this now? This, these are all the definitions. 263 subsection 9 will give all the definitions. See that beneficial owner, beneficiary, everything, all definitions are there. You saw that, no? 263 1A. First one was what? Company, firm. Then that individual before claiming. Fourth one was this person, beneficial owner, beneficiary, etc. Who is beneficial owner in respect of an asset means an individual who has provided directly or indirectly consideration for the asset for the immediate or future benefit. Similarly, beneficiary of an asset means an individual who derives benefit from the asset during the tax year, and consideration for such asset has been provided by any person other than such beneficiary. Here the definitions are given. All those definitions are also given in 263 subsection 9 under the same chapter, under the same section. Specified entity, we saw that they have to file return of income. Who is specified entity? Research association or institution, all in as per table. Schedule 3 table. Lot of tables are there in the act, my dear friends, now. Earlier there were few tables, you have lot of tables now. Then a person referred to in schedule 7, institution, university or other educational institution, hospital, medical institution, etc., etc. Move forward, sir. Specified loss. If you are, violation of specified laws, I told you, then you cannot file update return. What are those specified laws? Given in this section, smugglers and foreign exchange manipulators, forfeiture of property act 76, or prohibition of Benami Property Transaction Act 88, or PMLA Prevention of Money Laundering Act 2002, or Black Money Undisclosed Foreign Income and Assets and Imposition of Tax Act 2015. So even that specified laws, my dear friend, the meaning is given, definition is given, it's given in 263 subsection 9. Okay. And you please see this, this specified entity, they're told there specified entity also should file return of income. Here the meaning is given. How many types of specified entity are there? There are 14 types of specified entity. So even these 14 guys have to file return of income. There only they told specific entity. That specified entity is given in 263 subsection 9, 14 types. So even they have to file return of income. So there are 10. 263, 1, 2, 3, 4, there are 10. 263, 1A, there are 10 types of persons. Just I will tell you, so that we understand very well. And then specified entity meaning is given here. Yes, sir. 263, 1A. Company, firm, 3, person other than company, firm. Specified entity, what I told you, 4. So I told you here 8, here 4 specified entity defined in 263 9A. Who is that specified entity? That section 11 they are telling. Total income without giving effect to provisions of section 11. What is section 11 in the new act, my dear friend, 2025? Nothing but what was there in the section 10. Exempt. All the income was exempt, section 10. That has now become section 11. So even these, my dear friends, specified entity defined in 263 9C, how many types of specified entity? We just saw 14 types. Even those guys who are claiming exemption under 11, not 10 now anymore. Earlier at 10, now 11. Even those 14 guys should file return of income. So include those also here. We move forward, sir. Yes. So this is what specified loss, we saw that. Move forward, sir. This is tax return preparer. Same thing, 139B1, sir. Same thing it is. Then Written by whom to be verified? Ditto, don't worry. The spirit is the same, even the law is the same. 140 means written by, to be verified by whom? Who should, verify the return means who should sign the return of income? By an individual himself. If suppose individual is not possible for individual to verify the return, then any person holding duly authorized by him through valid power of attorney. Individual mentally incapacitated attending to his affairs by his guardian or any other person competent to attack. Hindu and David family, Karta. Company managing director. Company not being resident in India, any person holding valid power of attorney. Company which is bound up by orders of the court, liquidator referred to in 322 subsection 1 of the new Income Tax Act 2025. Company whose management taken over by central government, that is by principal officer of the government. Then a company for which application seeking corporate insolvency resolution process has been admitted by the adjudicating authority by the insolvency professional appointed by such adjudicating authority. A firm by the managing partner of the firm. Where the managing partner is not able to verify the return due to any unavoidable reason, or there is no managing partner as such by any partner of the firm not being a minor. LLP designated partner. Local authority principal officer. Political party by the chief executive officer of such political party. Any other association, any member of the association, or by principal officer of the association. So this is same thing, nothing to do. What is self-assessment tax? Really, all of you know, sir. 140 capital A. Same thing it is, nothing to worry. Ditto provisions are there. 140 capital A. Move forward, sir. Tax on update return. Everything is same. What was 140 capital B? Tax on update return. We discussed that. What you have to do? You have to pay, extra tax, under that earlier 140B. Now it is 267. How much to pay? Very simple, sir. 25%, 50%, 60%, 70%. If you are filing a return in response to update in response to 148, add a 10% additional tax. That's all. So what is it now? Additional income tax payable at the time of return. Furnishing the return under 263 subsection 6 shall be equal to. So what is 267 subsection 5? Same thing. 50%, etc. How they are telling? 50% of aggregate of tax and interest payable if such return is furnished after expiry of 12 months, but before completion of 24 months from the end of financial year succeeding the relevant tax year. Continue, sir. No change. Same thing, sir. Don't worry. Move forward. Now, there are some FAQs also I have taken from the SIRC portal of the Income Tax Department. So even that, FAQs are very useful, my dear friends. I have put that here. I have put those FAQs also for your reference. Yes. Some questions we will see which are useful. Then we can go ahead. If a taxpayer discovers an error in the ITR filed for assessment year 26-27 and wishes to file a revised return, which act governs the section? Which act governs the revision? Revised return for assessment year 26-27 will be governed by Income Tax Act 1961. Please understand, everything up to assessment year 26-27 will be governed by Income Tax Act 61. From tax year 26-27, it will be governed by Income Tax Act 2025. Okay. So what is 139.5? Because I am filing revised return for assessment year 26-27, as and when I file, what is the revised return, sir? 139.5 before the expiry of relevant assessment year, that is before 31st of March 27 for assessment year 26-27 or before the completion of assessment, whichever is earlier. Why I told before the 31st March? Because of the amendment 234I. If I put December to March, that extra fees I have to pay. The fact that the revision is being done after 1st April 26 does not change the applicable act. Old act will continue to govern all filings relating to 26-27 and earlier years. Now, suppose search is initiated. Just for information, that's all. We are not going to, search. I remember SIRC, which was held in Bangalore under Geeta Madam's, chairmanship. So I had the occasion to, discuss with, there were 3 stalwarts on the stage. And, we were discussing the, it was, there were 3 stalwarts on the stage and we were discussing the FAQs like this. So pertaining to search, we had a very good discussion. There were 2-3 very good speakers on the stage. I just remembered. Now, my dear friend, they are telling search happens. Search is initiated on a person under section 132 of the old act before the new act came into effect. Understand carefully. Initiated on a person under 132 of the old act before the new act came into effect. But notice for filing return for the block period is issued after 1st of April 26. Then under which act taxpayer required to file return? All proceedings connected with such search continue to be governed by the old act only, as if the new act had not been enacted. Why? Because the search took place before the new act came into force. But notice for filing return for block period will obviously be issued after 1st April 26. Therefore, the taxpayer required to file his return of income for block period as per provisions of 158 BC only. For example, tax on search on taxpayer is initiated in the month of January 26. Then assessments and all other proceedings connected with the search will be under the provisions of the old act. Anyway, this is only assessment procedures other than search it is. Okay. So just, these questions we just discussed, because that is a topic in itself. Suppose the books of accounts, other documents are assessed by requisition 132A of the old act. Before the new act comes into force, follow-up action under the old act or new act, all proceedings connected with such requisition will be under the provisions of the old act only. Now, move forward, sir. Now, we will go to the next section, procedure for assessment, chapter 16, part A, earlier chapter 14. So now assessment procedures. Now, sir, inquiry before assessment. What is inquiry before assessment, my dear friend? 142.1. What was 142.1 is now 268.1. Ditto provision, nothing to worry. What was 142.1? Inquiry before assessment has now become 268 subsection 1. So assessing officer, what will you do? Have you filed return of income before the due date? You have not filed. Earlier, what they used to do? They used to wait till the due date. Otherwise, after the due date, they will issue notice under 142.1. You file return of income. Who will issue, sir, nowadays, sir? Nobody issues 142.1 for filing return of income. Nobody issues. Earlier, they used to issue. Now, nobody will issue. Otherwise, they are telling, suppose you have filed return of income, that is under 263 now. Earlier, 139. Or in whose case, time allowed on 263.1. That's what I told you. 139 in 1C has expired. Then notice required him on a due date specified therein. Person has not made a return within the time allowed on 263.1 or before the end of financial year succeeding the relevant tax year, they will ask you to furnish return of income. Or they are telling, if you have filed the return of income, they can call for such accounts or documents as the assessing officer may require, or such information and on such points or matters, including a statement of assets and liabilities, whether included in accounts or not, can be asked by assessing officer after taking prior approval of the Joint Commissioner of Income Tax. That is why when you see 143.2, even 142.1 will come. So they want to ask all these points in the course of the scrutiny proceedings. Now, move forward, sir. That I told you 142.1. If you want to ask for a statement of assets and liabilities not included in the accounts, you have to take the previous approval of the Honorable Joint Commissioner of Income Tax. And the assessing officer shall not require the production of any accounts relating to period of more than 3 years prior to the relevant tax year. More than 3 years prior to the relevant tax year. Okay. Next. This 268 subsection 3 says notice under subsection 1A may also be served by the prescribed income tax authority. Who is prescribed income tax authority? This was what? Where was this 268.3 earlier? It was in second proviso to 142.1. There is no proviso, my dear friend. No explanation, my dear friend. 1200 and 900 explanation provisos have been, removed from the statute. That is what people think. It is all coming one after either in the form of simple sentences. Only the provisos and explanations have been removed, but still retained in the form of simple sentences in the act. There are no more provisos, explanations, but they have become part of the section, subsection, clause, etc. That's all. Okay. Next, who is the prescribed income tax authority 268.3 for issue of notice under subsection 1? That is given in Rule 170. Prescribed income tax authority, they say for 268.3 for the issue of notice under subsection 1 of the said section shall be an income tax authority not below the rank of ITO who has been authorized Central Board of Direct Taxes to act as such authority for the purposes of 268 subsection 3. So they are telling for the purpose of obtaining full information in respect of income or loss, AO may make any such inquiry as considered necessary. So that takes care of 142.1. Come to 142.2a, which is akin to 268 subsection 5. Which was this? This is 268 subsection 1, inquiry before assessment. Now we go to 142.2a, which is nothing but 268 subsection 5. Now, you know, the 142.1 proceedings have begun, scrutiny proceedings have begun, etc. If at any stage of proceedings before him, the AO having regard to 5 situations, understand carefully, at any stage of proceedings are still in progress, not yet completed, order is not yet passed. What are the 5 situations, my dear friends? Having regard to nature and complexity of the accounts, volume of the accounts, doubts about the correctness of the accounts. You are just having mere doubts. You are having just doubts. Nature and complexity, volume of accounts, even volume of accounts, doubts about correctness or multiplicity of the transactions in the accounts, or specialized nature of the business activity, and in the interest of revenue. He is only of the opinion that it necessary so do, then he may call for special audit. 142A, nothing but special audit. When can he call for special audit? Because of these 5 situations. Then he has to give the assessee reasonable opportunity of being heard after taking the approval of the Honorable Principal Chief Commissioner or Chief Commissioner of the Principal Commissioner. Then he will direct the assessee to get either or both of the following. He will direct the assessee to get the accounts audited by an accountant and to furnish a report of such audit. Even though your accounts are already audited also, he can call for audit. Or to get the inventory valued by a cost accountant. Sorry, that business is gone. Only a cost accountant do inventory valuation. It is no more the prerogative of the chartered accountant. Department is outsourced that to a cost accountant. So either they can call for special audit of the accounts, or they can call for special audit of the inventory valued by a cost accountant, and to furnish a report of such inventory valuation in the prescribed form as duly signed and verified by such cost accountant. Now, which is the form, sir? Under 268.5, the report of audit of accounts of the assessee required to furnish under 268 subsection 5 clause 1. Your audited accounts will be form 100. Where that is given, sir? It is given in rule 171 of IT rules 26. Then report of inventory valuation that will be given in 260. What is given in 268 subsection 5 clause 2? It shall be in form number 101. Okay, sir? So audit report, form 100. What? Audit of the accounts. Which audit? Special audit. Directed by assessing officer. With the prior approval of the chief commissioner, principal commissioner, etc. Then, based on those 5 parameters actually. Okay? So, if you see even the rules, my dear friends, what was the rules earlier and what is the rules now? So even the rules have reduced. Move forward, sir. The accountant or the cost accountant as referred to in subsection 5 shall be nominated by the principal chief commissioner or chief commissioner. Obviously, because you are calling for the special audit, so that accountant also shall be nominated by the PCCIT. Okay. And then who has to pay the fees? Obviously, you called for special audit. So the PCCIT only has to remunerate the chartered accountant or the cost accountant. 268 subsection 7 is telling what? Provisions will have effect irrespective of not whether or not accounts of the assessee have been audited under either law for the time being in force or otherwise. That means what, my dear friends? Even though your accounts are audited, still you can call for special audit. That means, why I want to highlight this is because provision shall have effect irrespective of whether their earlier law, earlier section 142b, there was the word notwithstanding. Notwithstanding, they are telling who will use the word notwithstanding in daily life. So they are telling I want to make Income Tax Act simple. Therefore, around 400 places notwithstanding was there in the act. It is removed. And in place of notwithstanding, what comes? Irrespective. Therefore, here it was notwithstanding earlier. Now it has come irrespective. Irrespective, they are telling you use many times. So remove the word notwithstanding. Therefore, it is now irrespective. So therefore, they are telling irrespective of not whether our accounts have been audited, I can call for a special audit. Then every report under subsection 5 shall be furnished within such period as specified by the, assessing officer. Earlier, my dear friends, there were 511 rules. Now the number of rules are 333. 511 rules earlier, now only 333 rules. Then, obviously, every time we want extension of time. So you give me some time to furnish the audit report. So the AO, either on his own motion or on an application made in his behalf by the assessee, and for any good and sufficient reason, extend the period by such further period or periods as he thinks fit. All done, sir. Some time you gave further extension, overall, originally time fixed and period or period so extended cannot in any case exceed how much time? 6 months from the end of the month in which direction is given to the assessee. Direction is received by the assessee. Maximum time how much, sir? It cannot be beyond 6 months from the end of the month in which direction under subsection 5 is received by the assessee. 6 months from the end of the month. Okay? You may give 1 month time, 2 months time. Then you will tell, I want some more time. You will tell, I want some more time. Okay. Original time, extended time, further extended time cannot go beyond 6 months from the end of the month. Next, I told you expenses of audit or inventory valuation. Who called for it, sir? Assessing officer with the prior approval of the chief commissioner. So you only called for special audit. Therefore, you only remunerate the chartered accountant as well as the cost accountant. Expenses of audit or inventory valuation. Who will determine? Obviously, who appointed principal chief commissioner? Then paid by the central government. Then, so but the report has come now. Report has come in the hands of the assessing officer. What will you do with the report? The assessee shall accept where the assessment is made under section 271. What is section 271? 144 ex parte assessment, best judgment assessment. Be given an opportunity of being heard. Why? They got that no special audit report. So that special audit report will be given to a copy to the assessee. They will tell now, before passing that special audit report, be given an opportunity of being heard in respect of any material gathered on the basis of any inquiry under subsection 4 or in audit or inventory valuation under subsection 5 and proposed to be utilized for the purposes of assessment. Obviously, before using any material, they will give an opportunity of being heard. If suppose assessment is made under 144, then obviously there is no opportunity. Cost accountant means cost accountant defined under Cost and Works Accountant Act of 1959. Okay. Next, estimation of value of assets by the valuation officer. That is 142A. So 142A is over. Now 142A. What is 142A? Nothing but estimation of value of assets by a valuation officer, which is now become 269 subsection 1. Assessing officer may, for the purposes of assessment or reassessment, see, these are all the arrows in the quiver of the assessing officer to frame an assessment. Arrows, one by one, I will leave all the arrows. Now 269.1 is what? Estimation of value of assets by the valuation officer. So it starts section like this only, 142A, 142A. Assessing officer may, for the purposes of assessment or reassessment, make a reference to a valuation officer. For what? VO, to estimate the value, including the FMV of what? Asset, property, investment. Asset, property, investment. Obviously, he will refer the case to VO and VO has to give a report. Give a report to the assessing officer. Estimate the value, including fair market value of asset, property, investment. Who is a VO, sir? VO is defined in 110 of the Income Tax Act of 2025. Valuation officer means a person appointed by central government as a valuation officer who shall exercise powers as specified in 269.3. We will see now 269.3. And includes a regional valuation officer, a district valuation officer, and assistant valuation officer. The assessing officer may make a reference to the VO whether or not is satisfied with the correctness or completeness of the accounts. Please understand, AO may make reference to the VO whether or not is satisfied about the correctness or completeness. Now 269(3) for estimating the value, including the fair market value of the asset, property, investment. Now what happens? 4 other persons have entered now. Apart from the valuation officer, what will they will do? Valuation officer now, along with him, engineer, overseer, surveyor, assessor. All these are authorized by the such VO. Valuation officer, engineer, overseer, surveyor, assessor, authorized by such valuation officer. Subject to rules made in this regard and at such reasonable time, understand, such reasonable time, he can enter. Obviously now he wants to value, no, he's been referred for valuation, fellow will, has to enter. So he can, subject to the rules and subject to reasonable time, he will enter any land within the limit of the area assigned to the VO. Area assigned to the VO, or enter any land, building or other place belonging to or occupied by any person in connection with whose assessment reference has been made to the VO, or inspect any asset, property or investment in respect of which a reference has been made to the VO. So he can inspect asset, property, investment. Those 3 words are there from the beginning. Asset, property, investment. Okay. Now 263, 269 subsection 3 clause B. VO or any engineer, overseer, surveyor, assessor may require any person in charge of or in occupation or possession of such land, building or any other place or such asset, property or investment to afford necessary facility. Okay, so whoever is that person in charge of or in occupation or in possession. So person either in charge of or in occupation or in possession of what? Such land, building or other place or such asset, property, investment. He has to afford necessary facility to survey or inspect the land, estimate its value and share all the documents for the valuation. Then the VO and those 4 guys will enter such land, building or place. To what? To inspect that asset, property or investment with the consent of the person in charge or in occupation or possession of such land, building, place or asset, property, investment. After giving at least 2 days time, my dear friends, straight away you cannot enter. You have to give at least 2 days notice in writing. 2 days, at least 2 days in advance you have to give to such person. Then take his consent. Okay, and then enter. Then if a person under this subsection required to afford any facility to the VO and those 4 guys, they don't cooperate. They refuse, they evade. They tell we cannot give you such facility. That means to inspect that asset, property or investment. Then the VO will utilize all his powers, because what powers are vested in him? Are vested in the court under Code of Civil Procedure Act 1908. Okay, so he can utilize such powers. The VO shall also estimate the value of the asset, property or investment after taking into account such evidence as the assessee may produce and any other evidence in his possession gathered after giving an opportunity of being heard to the assessee. Then the VO will estimate the value of asset, property or judgment or investment to the best of its judgment, obviously if you don't cooperate. Then now the VO has completed the valuation of the asset, property, investment. So he will send the report of the estimate to the assessing officer, 1 copy to the assessing officer, 1 copy to the assessee. Now suppose there is mistake in that valuation report. So this is the new section 269 subsection 7 newly added. It was not there in 142A earlier. With a view to rectifying any mistake apparent from record, the valuation officer may amend any report made by him as per 287. 287 is nothing but that 154, sir. So don't worry. So he will amend the report. Now they have given that power. Rectify the, the valuation report if there is any mistake apparent from record. Okay. Now 269 subsection 8. The assessing officer may, on receipt of the report from the valuation officer and after giving the assessee an opportunity of being heard, take into account such report in making the assessment or reassessment. Obviously, why did the assessing officer refer to valuation officer? Asset, investment, property. This will add a doubt. No, sir, this according to me, the construction cost spent may be 5 crores. Value of the property may be 5 crores. Assessee has shown only 2 crores. So VO report will tell it is 4 crores, etc. That is why he referred the case to the valuation officer. So he will take into account that report in framing the assessment or reassessment. Again, time limit. You call for valuation. So valuation officer has to send the report to assessing officer. So what is the time limit? Within 6 months from the end of the month in which reference is made. Again, sir, within 6 months from the end of the month in which reference is made. So 269 subsection 10 again newly added. Central government will appoint as many valuation officers as necessary, subject to obviously the rules and orders of the central government, regulating the conditions of service of persons in public services and post. Then a principal chief commissioner or a chief commissioner or a principal commissioner or commissioner may appoint as many engineers, as many overseers, as many surveyors and as many assessors to assist the VOs in performance of their functions. That takes care of VO. That is reference to the VO. That is section estimate of value of assets by the valuation officer. That is asset, property, investment, 269, which was earlier 142 capital A. Move to the next section, my dear friends. It is what? 143.1 intimation. Same thing, don't worry. What is that intimation, sir? 143.1. It has now become 270 subsection 1. So any return made under 263, that is 139.1, or in response to a notice under 268.1, that is 142.1, return will be processed. Return will be processed after making the following adjustments. What all adjustment they can do? Same thing, sir. Even in 270 subsection 1, even in 143.1. Arithmetical error. Number 1, arithmetical error. What all adjustments you can do? Arithmetical error. Then an incorrect claim. If such incorrect claim is apparent from any information in the return, any such inconsistency in the return with respect to information in the return of any preceding year as will be prescribed. Dissolution of loss claimed in the return. If the return for which set off of loss is claimed was furnished beyond the due date. Now they know, sir. This 8 years, all this set off, carry forward of loss, etc. You have filed the return, everything is computerized, link is there. You have filed the return belatedly, not within the due date. They know 1 crore loss claimed, year in which return was filed for the set off of loss, carry forward of loss, year in which loss was incurred, filed beyond due date. Intimation will pass, disallowing the set off of loss. Then disallowance of expenditure or increase in income indicated in the audit report not taken into account in computing the total income. Okay, so disallowance of expenditure you indicated in the form 3CD, but you have not made addition there. For example, your 43 H, 43B clause H, payment to MSMEs, etc. paid beyond the, the time period of 15 days or 45 days as the case may be, etc. That addition will be made. You have indicated there in the tax audit report. For example, 3615A, your, ESI, PF, etc. You have paid beyond the due date under the specified statutory act. You have indicated in the audit report, but you have not made an addition. Then the sixth situation is deduction of disallowance claimed under section 144, or under any of the provisions of chapter 8C. What is chapter 8C? That is, that 80IA, 80IB, etc. 80IA to 80 RRB. And what is section 144? That was, that units in special economic zone, section 10AA, etc. Okay. Why you want to disallow the deduction? Because the return is furnished beyond the due date specified under section 263 subsection 1. So these are the 6 scenarios. Intimation may be passed, my dear friend. Same thing, intimation will be passed. Okay. Now they are telling that before passing the intimation, before making any adjustment, what adjustment? That those 6 types of adjustments. I have to give you 143(1)(a). Communication is to be given to the assessee of such adjustments either in writing or in electronic mode. Then the response received, if any, shall be considered, and where no response is received within 30 days of the issue of such communication, Act itself is telling, sir, 30 days, 270 subsection 2. Such adjustments will be made. Thereafter, intimation or subsection 1D shall be sent. Okay. So then the 270 subsection 3. Then 270 subsection 4. To what is 270 subsection 3? That is, akin to first proviso of 143(1). They are telling where the loss declared in the return of the assessee is adjusted, but no tax or fees payable, no refund is due to him, still intimation shall be sent. Then 270 subsection 4 gives the time limit. What is the time limit for, processing of return of income or for issue of intimation? no intimation shall be sent after the expiry of 9 months from the end of financial year in which the return is made. 9 months from the end of financial year in which return is made. So tax year 26-27. Okay. Financial year, the tax year will end on 31st of March 27. So time limit is there up to, return is made. They are telling expiry of 9 months from the end of financial year in which the return is made. So March 27. So whenever you file the return, suppose you filed your return in December 2027, no problem. When will that financial year end? March 27. 9 months from the end of that financial year. That is 31st of December 2028. Okay. So you'll have to file the return of income. I mean your 143. Processing of intimation. They are giving the meaning of incorrect claim of return of income. What is the incorrect claim? Apparent from any information in the return. That meaning is given. Suppose there is no intimation passed at all. Then they are telling 270 subsection 5 clause B says acknowledgement of the return only shall be deemed to be intimation. Why? There is no sum payable, no sum refundable, and no adjustment is also made. Therefore, there is only acknowledgement. They have not sent an intimation. Example. Normally, they will send the intimation in all the cases. Returns are processed. So, acknowledgement shall be deemed to be the intimation. Next, move forward, sir. Now, 270 subsection 8. All your bread and butter, sir. Bread and butter of the chartered accountant. Scrutiny notice 143 subsection 2. What is 143 subsection 2? Your scrutiny notice. That is now 270 subsection 8. So, return has been furnished under 263. That means 139.1. Or in response to notice on 268.1, that means 142.1. Then the AO or the prescribed income tax authority. AO or prescribed authority, if it considers it necessary or expedient, ensure that the assessee not understated the income, computed excessive loss, underpaid tax, same thing, sir, shall serve on the assessee a notice. Service versus issue. So 143.2 or 270 subsection 8, notice shall be served. Okay. Then what is the time period for 143.2 or this 270 subsection 8 notice? What is the time period? It is given in 270 subsection 9. No notice under subsection 8 shall be served on the assessee after the expiry of 3 months from the end of financial year in which the return is furnished. Same thing. Sir, 30th June. So for the assessment year 26-27, okay, 30th June is the due date for scrutiny. For example, again they are telling again for expiry of 3 months from the end of financial year. April, May, June. Simple. So same thing. It is only from the end of the financial year. Okay. Shall be served on the assessee after the expiry. Tax year 26-27. So tax year will end on March 27. Then again 1 year financial year you have time, sir, up to March 28. So June 28 will be the expiry of 3 months from the end of financial year in which return is furnished. Move forward, sir. 270 subsection 10 is what? 143.3. 143.3 is what? Nothing but 270 subsection 10 assessment order. 143.3 is now assessment order. Which section? 270 subsection 10. Same thing. Nothing to worry, sir. Hearing such evidence, assessee may produce, and such evidence as a AO may require on specified points. After taking note of all relevant material, etc., order in writing making an assessment of the total income or loss of the assessee, etc. Same thing, nothing to worry, sir. Everything is same. Move forward, sir. Next, best judgment assessment. Now, what is best judgment assessment? You are 144. That 144 has now become 271 subsection 1. What was 144 has now become 271. Best judgment assessment. When can you make a best judgment assessment? What is 144 subsection 1? 271 subsection 1. Return is not filed under 263.1, that is 139.1, or 263.4, which is 139.4, or 263 subsection 5, which is 139.5, or 139 or 263 subsection 6. Nothing but updated return. 139.6 is what? 139, this 263.6 is 139.8A. Okay. So you have failed to file all these returns or failed to comply with all the terms of a notice issued under 268 subsection 1. What is 268 subsection 1? 268 subsection 1, 263 subsection 6. What is 268 subsection 1? Nothing but 142.1, my dear friend. So if you fail to comply with all the terms of a notice on 268.1, failed to comply with the direction under 268 subsection 5. What is 268 subsection 5, my dear friends? Special audit 142 2A. 268 subsection 5. Or having made a return, fails to comply with all the terms of a notice issued under 270 subsection 8. Obviously, when a return is filed, then only it can be taken up for scrutiny. So that is why the section starts 271 1C is telling, having made a return, failed to comply with all terms of a notice issued under 270 subsection 8. What is 270 subsection 8? Nothing but it is 143 subsection 2. Okay. So all these failures are there. Then what will happen? Assessing officer, after taking into account all relevant material which is gathered, shall, after giving the assessee an opportunity of being heard, make the assessment of total loss or income to the best of his judgment and determine the sum payable by the assessee on the basis of such assessment. That's all. Next. Then he's telling assessing officer, before making an assessment on subsection 1, that is your 271 144, shall, subject to the provision of subsection 3, serve a notice on the assessee to show cause as to why assessment should not be completed to the best of judgment. Before making best judgment assessment, he will give a show cause. Okay. What is 271.3? He is telling, I will not give any show cause to complete the case under 144 or 271. Okay. 271.1. Okay. When? If you have where notice is issued under 268.1. Okay. That means what? 268.1 and 142.1 is issued already. Now I am not giving you opportunity of being heard. I giving you opportunity under 142.1 I issued. You did not comply. So you cannot tell now, give me one more opportunity. Okay. 268.1 is why 142.1 issued. If you have not filed return of income, file return of income. Or he asked all these details. You are not submitted. Therefore, he will not give one more opportunity. Next. Power of Joint Commissioner to issue direction in certain cases. What was 144 capital A is now 272 subsection 1. Joint Commissioner may on his own motion or on a reference made to him by the AO or an application by an assessee call for and examine the record of which assessment is pending, having regard to the nature of the case or amount involved, or for any other reason, issue such directions for the guidance of the AO to enable him to complete the assessment. Such directions are binding on the assessing officer. Let me tell you, my dear friends, now for this year 148 notices. You are receiving for assessment year either 22, 23, 3 years or 5 years, etc. The Joint Commissioner, Additional Commissioner has the power to drop all 148 cases. He has become all the more powerful now. So therefore, you can go to your Additional Commissioner, etc. You can appear before him. If the case, that means what? 148A has come. A1, you have received show cause. A2, A3. Still 148 has not come. Okay. You can still have the case dropped subject to the satisfaction of the Honorable Additional Commissioner, providing all the details. Why? Because this power is there now with the Additional Commissioner to drop. He can close the reassessment proceedings. Now come to your faceless assessment. So your 273.1 is nothing but your 144B1. So here earlier, notwithstanding anything to the contrary contained any other provision of this act, now it is irrespective of anything. Assessment, reassessment, recomputation, 270 subsection 10, 143.3, 271, 144, 279, your reassessment, 147. Okay. As the case may be, with respect to the cases referred to in subsection 2, shall be made in a faceless manner. Okay. Move forward, sir. Faceless assessment shall be made in respect of such territorial area or persons or class of persons, income or class of income, case or class of cases specified by the board. So, board, all the center and units, etc. National Faceless Assessment Center, Assessment Unit, Verification Unit, Technical Unit, Review Unit, etc., etc. Okay. So, the faceless, headless, senseless assessment will continue. Don't worry. So, 273, 12, 13, everything is, related to this faceless assessments. Okay. Move forward, sir. Next, reference to Principal Commissioner or Commissioner in certain cases. What is that 274? Nothing but GAR, sir. You want to declare an arrangement as impermissible avoidance arrangement. Then, the assessing officer will make a reference to the Principal Commissioner or Commissioner at any stage of the assessment or reassessment proceedings before him based on the material evidence available with him. Move forward, sir. Then, reference to DRP. So you know this DRP is nothing but your 144C. What was that 144C? It was given earlier under who is a DRP 144C subsection 15 used to define that. What is that 144C subsection 15 was defining DRP. Today 144C subsection 15 is in 275 subsection 17. Who is a DRP? DRP means a collegium comprising of 3 principal commissioners constituted by the board for this purpose. Who is eligible assessee? Any person in whose case variation arises as a consequence of TPO. So that is why the DRP, TPO passed under 166.6 or a non-resident not being a company or any foreign company. Okay, move forward, sir. Method of accounting, 276 subsection 1. What is method of accounting? Same thing. Your PGBP or other sources only are to be computed as per the cash or mercantile system of accounting regularly employed by the assessee. Okay, then 276 subsection 2 is what? Like your 145.2, central government will notify all the ICDS. What is 276 subsection 3? Akin to 145.3. I told you best judgment assessment under 271. There are 3 more situations of best judgment assessment. It is not there in 271 or it is not there in 144. It is there in 145.3 or 276 subsection 3. What is 276 subsection 3? I can still make a best judgment assessment under 271 if not satisfied about the correctness or completeness of accounts of the assessee. Method of accounting provided in subsection 1 has not been regularly followed by the assessee, cash or mercantile system. Or income has not been computed as per the standards notified under subsection 2. That means your income disclosure, your income computation and disclosure standards, ICDS. Income has not been computed as per the standards notified under subsection 2. It can still result in best judgment assessment. 145, you know. Valuation of inventory. What is 145A is nothing but 277 subsection 1. Valuation of inventory will be lower of cost or net residual value computed as per the ICDS under 276 subsection 2. Then again, you know, clause 2 is what? Value of purchases, sale of goods or services, valuation of inventory shall be adjusted to include any tax, duty, cess or fee, etc. Beautiful record is there in our, you know, guidance note on the tax audit. Move forward, sir. Then taxability of certain income, 278 subsection 1, nothing but 145B subsection 1. Interest received on any compensation or enhanced compensation shall be deemed to be income of the tax year in which it is received. That's all. Okay, move forward. Now income escaping assessment. Income escaping assessment. I'm not quite happy with the way the act is worded, you know. 147 they are telling order. Then 148 they are telling notice. 149 they are telling time limit. Then 151 they are telling sanction. So ideally it should have been first sanction. Okay, then notice, then time limit, then, you know, order. So first sanction, then see the time limit, then issue notice, then order. But act is going 147 order, 148 notice, 149 time limit, and 151 sanction. Same thing in the new act, sir. First they are telling 279.1, nothing but 147. They are simplified. If in the case of an assessee, any income chargeable to tax has escaped assessment. Act is clearly telling any income chargeable to tax. Okay? But left, right and center, you people reopen. With due respects, if in the case of an assessee, any income chargeable to escaped assessment for any tax year, then you have to follow the procedure 280, 286. Okay? Assess or reassess such income, recompute the loss or depreciation allowance or any other allowance or deduction for relevant tax year. Okay? Very, very simple. 280 is nothing but 148. 281 is that procedure, you know, before issuance of notice, old section 148A. 282 is the time limit for issuance of notice under 280 and 281, old section 149. Then 283, provision for cases where assessment is in pursuance of an order on appeal, etc. 284 is sanction for issue of notice, which is nothing but 151. 285 other provisions, 152, that is when can reassessment proceedings be dropped, that is given in 152. Then time limit for completion of assessment, reassessment, recomputation, old section is 153. Then 279 subsection 2. 279 subsection 1 you saw, sir, any income chargeable to tax, that's all it told. Now they are telling, subsection 2 is telling, for the purpose of assessment, reassessment, recomputation, AO may assess or reassess the income in respect of any issue which has escaped assessment, which comes to his notice subsequently in the course of proceedings. irrespective of the fact that provisions of 281 not been complied with. Okay. So even though I have not issued show cause notice, I am telling you income at Mysore has escaped assessment. In the case of Ramchandra, information is there, income at Chennai escaped assessment. Now in the course of the proceeding, they come to know income at Mysore has also escaped assessment. I will not give you show cause notice again. 148A1. They are telling no need to comply with the provisions of 281. Straight away you can include it in 148. Straight away you reopen karke. Next. This is the most important amendment, you know, that 279. Java versus FOW. So in 279, after subsection 2, following subsection shall be inserted. 279 subsection 3. The assessing officer for the purposes of 280 and 281, 148, 148A1 shall mean to be an AO other than NFAC or any assessment unit referred to in 273.3. So here they have put that amendment. Issue of notice for income has escaped assessment. So 280 subsection 1, that is nothing but your 148 subsection 1. So they are telling before issuing notice under 148, I will give you show cause notice. Okay. That is nothing but subject to 281 and 281.3. That is 148A1 or sorry 148.1, 148.2, 148.3. Earlier 148A, AB, AC, AD. So that is only now 281, 1, 2, 3. Okay. So show cause notice will be given. Then, so this is 148 first actually. Then 281 is your show cause notice. So 280 is issue of notice, that is 148. So first notice will be given 148 to file return of income. Period will be specified in that 148, my dear friend. What is 148? Nothing but 280 notice. Okay. What is the maximum time period? It shall not exceed 3 months from the end of the month in which notice is issued. Don't tell me online I can file even after 6 months, sir. You can file, sir, but will not treat as a valid return by the department. 148 is issued, 280 is issued. Maximum time limit is 3 months from the end of the month in which notice is issued. Okay, that is 148. So return of income required under subsection 1 shall be furnished in such form, verified in such manner. All provisions of this act shall apply accordingly as if such return required to be furnished under section 263. 280 subsection 3, my dear friends. Any return furnished after expiry of the period specified in the notice shall not be deemed to be a return in 263. Here itself it says. Although the CPC will allow you in the portal to upload, 280 subsection 3 debars you. They are telling any return furnished in response to notice under 280 after the expiry of the period specified in the notice, that means more than 3 months from the end of the month in which notice is issued, it shall not be deemed to be a return under 263. Okay. Now what is 280 subsection 4? 280 subsection 4 is crystal clear, sir. No notice under this section shall be issued unless there is information with the AO, which, what is it telling? Which suggests that income chargeable to tax has escaped assessment in the case of assessee for relevant tax year. Next, 280 subsection 5. No notice under this section excuse me, shall be issued without the prior approval of the specified authority where the AO has received information under the scheme notified under section 260. So no notice and shall be issued without prior approval where the AO has received. So all this, you know, you have to take prior approval. Information is received under the scheme notified in 260. What is 260? Nothing but your 135A. What is 135A? My dear friend, go back to your portal. There is a assessee. That fellow is receiving rent, example, say at 5 lakhs per month. AIS is there, TIS is there. You will go on the portal. You will call out all the information. If you see there 133.6, there are 3 notices there. Nobody bothers to reply. First notice, second notice, third notice. What will happen? This becomes 135A information. The law is telling INCI of the department is there, INCI. So that information is being uploaded, but you people have not responded to that 133.6. First, second, third. Inspector also department will call. No response. So therefore, it is deemed reopening. Information under notified under 260 means 135A. This deemed information. I am not disputing, sir, that you have not offered the rent to tax. That rent what information has come, maybe more, maybe less, maybe correct. But you have not responded. You are not telling yes, yes, or it does not belong to me, or different belongs to different person, different PAN, etc., etc. No response on the portal. So therefore, it becomes a deemed information. Case will reopen based on that. Information under the scheme notified under 260, that is 135A, your faceless information, etc. You have to take approval. Direction of approving panel. Approving panel, we discussed that GAR. Okay, General Anti-Avoidance Rule. Any finding or direction contained in an order passed by an authority, tribunal, or court. Okay. Finding or direction, no problem. Contain order under this act, authority, tribunal, court. By way of appeal, reference, revision. No problem. Appeal, reference, revision. Or by a court. Imagine, my dear friends, by a court in any proceeding under any other law. Or by a court in any proceeding under any other law. That also becomes an information. Suppose you are caught under PMLA. You are caught under, the smuggling goods. You are caught under Customs Act. Or by a court in any proceeding under any other law. Any finding or direction contained in an order passed by a court in any proceeding, any other law. Income Tax Act, okay, authority, tribunal, court, any proceeding, appeal, reference, revision. Okay, all these things he has to take the approval of the specified authority. Move forward, sir. For the purpose of this section and section 281. This section means what? 280. What is 280? 148. And then this and 281. What is 281? Nothing but 148A. Okay? 148, 148A. That show cause notice. Okay? The information with the assessing officer which suggests that the income chargeable to tax has escaped assessment means any information in the case of the assessee for relevant year as per risk management strategy formulated by board from time to time. Any audit objection that the assessment has not been made as per that. Imagine the word, sir. Audit objection. Any audit objection. One order is passed. Faceless assessment. All the orders are passed. After the orders are passed, it's all papers and documents are transferred to the JAO. JAO means from FAO it transferred to JAO, Jurisdictional Assessing Officer. See the dangerous word. Any audit objection. They will tell audit objection 234 ABC. Rebate not claimed correctly 87A. Whatever. They remove some audit objections. Creditors confirmation not taken. Any audit objection, assessment is not framed properly, reopen. Any information received an agreement 159, that is 1998. Any information, you're available to the assessing officer, scheme notified 260, I told you that 135A. These are all information, okay? Then next one, any information which requires action in consequence of order of tribunal or court. Okay. Sixth information, any information in the case of an assessee emanating from the survey conducted on 253, nothing but 133A, sir, other than TDS survey. Then any direction in the case of assessee given by approving panel under 274 subsection 6. What is 274 subsection? Nothing but your 144BA, sir. That is but GAR. Then eighth one, information. Any finding or direction contained in an order passed by any authority, tribunal or court in any proceeding under this act by way of appeal, reference or revision, or by a court in any proceeding in any other law, what we discussed. 8 types of information. So information means, they have given the meaning of information. 280 subsection 6 is telling for the purposes of issuing notice under 148A, show cause notice, or 148, meaning of information. 8 types of information. Word use is means. Okay? That means what? Means. Watertight compartment. Means this only. That's all. No question of any inclusions or exclusion. 8 types of information. Now, very simple, sir. Before issuance of notice under 280 means before issuing 148, I will issue 148A. Similarly, before issuing 280, I will issue show cause notice on 281. What? I will give you an opportunity. I will issue show cause and asking him why I should not issue notice under 280. Then that show cause notice will be accompanied by the information which suggests that income chargeable tax has escaped assessment. On receipt of such notice, assessee will file his reply. Then assessing officer will consider the reply, okay, based on the material available on record and take into account reply of the assessee. Then he will pass an order, but that order has to be passed with the prior approval of the specified authority. Specified authority, I told you, additional commissioner. You can go there in Chennai now. Go there, meet him, give all the details. If it's a fit case to be dropped, they will drop it now. They have the power now. So pass an order. Which order? 148A. subsection 3. Nothing but your 281(3). Okay. Pass an order with the prior approval of the specified authority. Now, earlier it was 148A, now it became 148(1)(2)(3). Okay. Determining whether or not it's a fit case under 280. Okay. 281(4). Provisions of this section shall not apply to any income chargeable to tax escaping assessment for any tax year where the assessing officer has received information under the scheme notified under 260. What provisions of this section? I will not give you show cause notice. I will not give you 281. Straight away I'll issue 280. That means I will issue straight away 148. I will not give 148A. When? 3 situations. Number 1, that's 135A or information received scheme notified under 260, 135A. Faceless reassessment. Directions issued by approving panel GAR. Any finding or direction contain order passed by any authority, tribunal or a court in any proceeding by way of appeal, reference, revision or by a court in any proceeding and any other law. Sir, he will not give you the, he will not give you the show cause, but is bound to take the approval of the respective authorities. Next, time limit. What is the time limit, sir? Now, 280. 280 is what here? 148. How much, sir? Thankfully, they have gone back to the good old days, 4 years and 6 years now. 4 years and 3 months I will have from the end of 11th tax year unless the case falls under B. Why 3 months? 3 months is for filing return of income. 4 years and 3 months unless the case under B means 4 years and 3 months but not more than 6 years and 3 months. So 4 years and 6 years time limit to issue notice under 148. Okay, 148A. 4 years and 6 years will be your for completion of that 3 months is only for filing the return of income. So 6 years and 3 months, 4 years and 3 months. Unless the AO has in his possession, when can I go beyond 4 years and up to 6 years? Unless the AO has in his possession books of account, document, evidence. Understand carefully, when can I go beyond 4 years up to 6 years? Unless the AO has in his possession, that AO should have in his possession what? Books of account, document, evidence. Related to what? Related to asset, expenditure, transaction, entry. Related to asset, expenditure, transaction, entry. Which will show what? That the income chargeable to tax escaped assessment amounts are likely to amount to 50 lakh rupees or more in case I want to go beyond 4 years up to 6 years. Therefore, the assessing officer very cleverly what he does, he will tell the wing to issue a summons 131. Hey, collect all the information from him. I don't have any information. I want to issue notice under 280 or 148. But I don't have information. Law is telling unless the AO has in his possession what? Books of accounts, documents, evidence. Related to what? Asset expenditure. No problem. Asset expenditure. Transaction or entry. My God, entry. Entry means what? What is entry? What do you mean the word asset expenditure transaction? Okay. Entry means what? Entry in the books of account. There are some bogus entries in the books of account you can reopen. Entry means what? Entry in the books of account. So some creditors are there. They are all bogus creditors. Entering the books of account. Income escaping assessment amounts are likely to amount to 50 lakh rupees or more. Okay. That is why they will tell they don't have information. Practically what will happen? 131 will come once a month. Hey, please give me a return of income. Give me bank statement. You have sold a property. Give me the deed, etc., etc. All information are taken. That INCA will issue also notice, take all the information. All these are modes of collecting all the information. So all information will be collected, given to the assessing officer. Assessing officer in his possession, he will go for approval. Please give approval and I will reopen the case. Understood. Next, no notice to show cause. That is your show cause, sir. More than 4 years and 6 years. Okay. That 148 and this is 148A. Similarly, 4 years, 6 years. Same thing. There it is 4 years and 3 months, 6 years and 3 months. Why? To file return of income, it is 3 months. That's all. Last 1 minute only I will close. No notice under section 280 or 281 shall be issued within 1 year from the end of tax year. Law is telling 282 3 debars. He is telling, hey, you cannot issue notice under 280 or 148 or 281. That means 148A. Within 1 year from the end of tax year. Why? Sir, scrutiny you do. There is time limit for you to do scrutiny. You cannot straight away bypass scrutiny procedures and start with the reassessment proceedings. Do scrutiny first. I am giving you 3 months time. Up to June I am giving you. You should have done scrutiny. So that 1 year time is there for scrutiny. Thereafter you have time to pass order. Directly you cannot go and reopen my case. So they are telling within 1 year keep quiet karke. Within 1 year from the end of any tax year, you want to do any inquiry, do it. You issue notice. You know that 143(2) or your 270, subsection 10. So it's telling you do that 143(3), etc. Move forward, sir. Now, that sanction I will do and I will close it, sir. So sanction to issue the notice for 148 or 280. Specified authority, there is no more confusion, my dear friends. I have been repeatedly telling you. Specified authority for the purposes of 280 and 281 shall be the additional commissioner or additional director or joint commissioner or joint director. 280 is 148, 281 is 148. Okay. Due to paucity of time and lot of sections, I thought whatever is important, let me complete it, because the limited time given to me was 4:30 to 6:30. I thank all the members for very patient here. Yes, I will share the PPT, sir. Many of them are requesting for PPT. Please share the PPT.
Rahman, are you there, Rahman Ali?
Yeah, I am very much available, sir.
Yeah.
Shall we conclude, sir?
Thank you, sir. Thank you so much.
Yeah. Thank you. In fact, our today's session speaker, CA NAVEEN KHARIWAL, is a pan-India renowned speaker on the direct taxes matter. He is widely appreciated for his practical and analytical approach towards income tax law, especially in the areas of assessment, litigation, and procedural aspects of taxation. May I now request CA Yaram Setti Venkata Banu Narayana Rao, Chairman of International Taxation Committee and Chairman of Members in Practice Committee of SIRC, to give us closing remarks.
One
minute.
Before that, I think GB Ravi Kumar has a question. Naveenji, will you be taking the question?
Yes, sir, please, sir.
Sir, any information during the course of assessment,
yes,
any audit objection you referred, after the assessment is over, CAG audit will be there.
Correct. Your IAP and RAP, sir. You are right.
Yes, that audit objection will not have a direct impact on the regular assessment in the old act. But
correct.
What about that chapter for an objection in the present act, sir?
Correct, sir. That IAP, RAP objections, as you are rightly pointed out, there are Supreme Court judgments, High Court judgment to that effect. So we'll have to argue those notifications, circular instructions will still hold good now. Based on that, you need to argue in the present situation also. Based on that, we have to create now. Now that the new act has now, see, it is applicable barely from 1st of April 26. We are hardly in the second month now. So all these we'll have to argue. Yes, sir.
Okay, nice of you.
That is
Sir,
very much
excellent
right.
presentation. Excellent presentation.
Thank you, sir. Thank you so much.
Wonderful. My best wishes to you.
Thank you, sir. Thank you so much.
Dear friends, I think still 213 participants are on the screen. That shows the popularity of any session taken by NAVEEN KHARIWAL. I fondly call him as Senior NTR, Shivaji Ganeshan, and Sai Kumar for his powerful presentations, the dialogue delivery, the modulation. You keep the audience engaged, sir. You keep all of us engaged with your powerful presentations. You are a PowerPoint on whatever subject you speak. Mostly you speak on direct taxes. And though I have heard you many times, every time it is like watching a new movie, or watching a Sholay again and again. You never get, you never feel that you have already seen it. So today so many stalwarts are there. Just to name one or two, or maybe Geeta madam was here till now. I am hopeful she's still there. Then Santana Krishnan sir is there. Then my Lions Club governor Manoj Purohit ji also is there. So many, Geeta madam, hello, and thanks for being there in the seminar. And Naveen ji, you have extremely, in an extremely easy manner, you have explained the comparison between the old act and the new act, and I think whatever doubts we had, you have really clarified them in a very, very lucid manner in your own inimitable style. And I'm very sure that we will all be struggling, or we will all be now trying to cope up with the renumbered sections. You have already become perfect. Now we have to do that. Like we had this problem when the 1956 Companies Act was made, 2013 Companies Act, and now we have to really pull up our socks and do all the memory test for remembering the new sections, and also try to compare with the old sections, because all, as you said, all the circulars and all the case laws pertaining to the old act will continue, and we will not say that they are not applicable. All are applicable. So thank you very much. It was such a wonderful session. I thank our Direct Taxes Committee of SIRC Chairman CA Arun, who has organized this program. And I'm also very much thankful that I have been given the opportunity to propose a vote of thanks. We plan to hear from you more often, as this year is very important for us to learn. Experts like you will definitely make the learning easy. Thank you very much. Thanks to all the participants. Any program success is measured only by the number of participants, and it's called the icing on the cake. And today's more than double century speaks volumes about the success of today's program. Over to Rahman Ali. Thank you very much, Naveen bhai. Once again, thank you very much.
Yeah, thank you, Bhanu Narayanan, sir. Sir, with the permission of the Naveen, sir, we will record this session. We have already recorded. With your permission, we will upload this session in SIRC YouTube channel for the benefit of members at large, sir.
Rahman, sir, I will mail the PPT, sir.
Yeah. Thank you
Yes.
Thank you very much, sir.
Thank you.
So with that, we have come to the conclusion of today's session on assessment procedures and return of income under the Income Tax Act 2025. SIRC is planning to have some more series on Income Tax Act. Please do join us in all our programs. Thank you, one and all, for your valuable time and presence. Thank you.